All righty. Good evening. My name is Kevin Hurley, and welcome to the Hurley Investments Financial Services Commentary for Tuesday, the 3rd of October. And I was going to do things a little bit different today. I actually have absolutely nothing planned. My thought today is I wanted to turn this 100% over to you guys to ask any questions you want to, or more importantly, to go ahead and ask me the tough questions. In giving you a little bit of time to figure out what questions you want to ask, I started managing my own money because of the cost associated with mutual funds and investment research, investment trading, and training back in the early 90s, where a brokerage house could make 14% and I could make 13%, which I found 100% absolutely ridiculous. For that reason, I started trading myself back then. I made money, I lost money. In fact, you've probably heard me say, I think I spent 5,600 hours or 5,800 hours with really about $5,000 of profit made. Now, yes, accounts are up $250,000 in that time, but when it's all said and done over like a 7-year period and 56 or 5,800 hours of trading, I made less than $1 an hour. And that's when I went to some education. Yes, I'm not a big fan of education. Yes, I've gone through the safe option strategies. I've gone through several others. But I would promote Jeffries because it's practical. It's real life trading. It's he put some pieces together for me that made all the difference in the world for me creating my own business and trading other people's money. With that said, I know I've seen a couple comments come in. I literally would like to give you 30 to 40 minutes today to go over any and every question or comment you have in regards to trading, and I'm going to answer them for you. I see the first comment that was made in here, seasonality. What sectors are you trading? All right. The seasonality for me, I don't pay a whole lot of attention to seasonality, meaning I'm not rotating in and out. I do my research at the beginning. Well, I'd actually do it over Christmas, but at the beginning of the year, I have in my mind what I'm going to trade and why. For sector rotation, I am trying to, I usually don't move out of it because I'm okay with things going down. I want to see rotation out of the energy and oils, you know, through the beginning of the year as they bounce back through summer, when they have their changeover from light crude to heavy crude. Those drops give me the ability to pick up more shares. I'll pay attention to seasonality with the Christmas rally and with retail, but rarely am I going to own retail. I want to own what retail sells. I'm not a particular fan of retail. So that's where I sit in regards to seasonality. I'm not spending a whole lot of time moving in and out. I'd rather trade the drops because I can pick up more shares. The VIX, VIX, and or the VXX, very hard to trade and very quick moving. So I tried to put on a couple VIX trades. I think I tried to put on 3. 2 of them were so-so, and one of them made up the money that I lost on the other one. So the VIX for me is extremely hard to trade as well as the VXX. You made the comment, other VIX-related ETFs. Believe it or not, Ida, Kramer today on Mad Money talked about the VIX, and the short answer is when the VIX is going up, the market should be selling off. When you see the VIX start to come down, the market's coming back. If they're both moving in tandem, that usually signals a pullback because they both will be going higher at the same time. So I don't think much of ETFs. I'm not an ETF trader. They don't have the explosive movement that I'm looking for in a stock. Rarely will you see an ETF lose 10-20% in a quarter, in which case it makes it very hard to pick up more shares. For me, the collar trade is obviously all about adding more shares with the profits from protection, and it allows me to sleep at night. That's why I collar trade. I don't want to give up what I've made. I don't want to give up what I've earned. That doesn't mean you won't see an account take a drawdown. But that drawdown, I at least better be lowering cost basis, and more importantly, I'm typically looking to pick up shares. So that is my goal for collar trading when I do what I do. All righty. Maud, Abraham, what are the 3 most important aspects to consider managing a collar trade? So let's go over collar trades really quickly. I don't want to say managing it per se, but let me make this comment. When you collar trade, you are allowed to make mistakes. The beauty of collar trading is you can make a mistake, like most recently I've done with Love or Southwest. They don't have their earnings. Southwest does not have their earnings until October 25th or 26th. But as I looked at a chart for Southwest, they weren't getting above the 50-day simple moving average, and of course then they skyrocketed. So I have protection at 55. When they weren't seeing to get over the 50-day, they weren't going to get above the 200. Of course I guessed wrong. So Abraham, I'm allowed to guess wrong and still be okay with my collar trades. They really could get back up to 64, 65 after earnings, in which case I've got protection at 55. I may keep it there, and the neat thing is I may only need to add a couple more contracts up at maybe 60 to give me a delta where I can make up over half of the downward movement. That's really all I'm looking for. Let's make up at least half the downward movement. Of course, I'd like 60, 75%, 80% of the downward movement. But if I can make up half of the downward movement, look how much better I'm going to be than everyone else that just follows along with the market. I collar trade for protection. I collar trade so I can sleep at night. But I collar trade because I don't have to be perfect. The key to collar trading is a longer time horizon and the ability to add more shares. I found out I like the way Warren Buffett makes money. I like the way that he is all that in a bag of chips. I want to grow a portfolio where I can add more shares and grow more shares. You have two ways to do that. You either put more money in, or you do it through protection or insurance. So that is one of the keys, is understanding you want to be in it for a while. You want to be in it so you give yourself the opportunity to add 50 to 100% more shares of stock over a 5-year period of time. I'll be 100% honest with you, Abraham. I'm okay with not making money on NVIDIA for 4 years. But getting the opportunity to triple share count and then watch it take off, even though I'm going to get called out down at 42 with an $18 credit, we're looking at 3 times the amount of shares at a cost basis of literally $12 on the original 1,000. So we're looking at a $4 cost basis, if not lower, selling 3 times as many shares for $60 a share. That's great. I really like that. I'm in good shape when that happens. You made the comment, 3 more important aspects to considering managing a collar trade. You want to see movement. Movement defined for myself at least 1 quarter where the stock loses 10% or more. As I'm looking at some of the things that I trade, if I was to go out and just do some chart analysis, trying to keep it simple, I'm looking for a stock with those type of movements. I want to see that. Well, Kevin, let's look at some of what you trade. I can go right on down the line. Apple, looking pretty good this year, but 64 to 49. Bingo, more importantly, 55 to 41. I'm good. I like what I see. I'm okay with that. That shows me what I want to see. I do. Look at how easy it was to read from 190 down to 166. I was going to say, more importantly, 185 down to 150. It's actually 160. Plenty of opportunities in here. Plenty of opportunities to go, hey, 185, 160, 173 down to 162, 183, 171. Those were opportunities. Well, Kevin, some of what you trade doesn't necessarily do that. But a lot of what I do does. Bank of America, Disney, Visa, core holdings here, right? Visa hasn't had big pullbacks this year. NVIDIA, Ford. Look at that chart. Great. Beautiful. Cheap $11 stock. Huge. Collar trading is not a mystery. Collar trading is keeping it simple. Also a credit spread. Short answer on a credit spread is primarily a covered call. Have to be willing to have your stock called away from you. Bull put, have to be willing to take stock ownership. Pretty simple. I got to be honest with you, I'm not a credit trade person. For years, credit trades usually have more overall risk than a debit spread. Again, kudos to Jeffrey. I want to pay to get played. When I hear someone tell me that, first thought that runs through my head. So you want to take more risk for less return than paying to play the game. Doesn't necessarily make a whole lot of sense to me. So I've primarily not been a credit trade type of person. It's just not my style to take some of the risk associated with I don't know, it's just not worth it to take some of the risk associated with credit spreads, especially if you're putting out the money and playing probabilities. You don't make enough credit for the risk that you're taking, iron condors and those kind of things. I've seen people lose both ways on an iron condor. Not worth the risk. Alrighty, Maud, do you trust this market? So, if I can shoot a question back at you, what is the description of our market right now? What is the description of our market right now? Straight up. Okay, that's correct. You are correct there. With that said, though, the key word that I was hearing more often than not is reflation, which means a global push of markets higher, backed by stimulus, endless printing, and the need to control the rise in interest rates slash inflation. So I made the comment that I wanted to write an article about this. We have put trillions into our market, which is why we have a market that can produce, what, 4 years in a row, lower year over year S&P 500 earnings, yet our markets will go up 80-some-odd%. Huge manipulation. Not only that, but it's worldwide manipulation. The key is, why haven't we hit that inflation? Why haven't we printed ourselves into ungodly, and I'm going to relate it to Brazil because I was in Brazil when this happened, ungodly inflation where you have to go and write extra zeros on your bills. And then to use those bills, because they got to save money for paper, you've got to draw a line through the money where it changes the name of the currency 2 or 3 times. Obviously, it's an end around. They're raising rates, but they're raising not only the real interest rate, but the bank interest rate, so the banks can hold the funds at the Federal Reserve, receive a risk-free interest rate off of that that's obviously matching the treasuries, which will not put that money into the system to cause some type of hyperinflation or deflation. I mean, there's all kinds of inflations that it could be. When you say, do I trust the market? Welcome to, once again, first time ever happening in our, and I was going to say in our history, that's not the word I'm looking for. In our, it's a historical event. That's the way I'm trying to say it. It's a historical event. We're running through the greatest, the second greatest bull run in history. because of that, do I trust it? Not at all. I'm worried sick. In fact, in all reality, the crash when we have it will be absolutely horrific. It'll be a record-setting crash. It'll be something the world hasn't seen because all the pieces are in place right now to prop up all the markets. When the domino effect happens, when you see a Greece go, which is only 3% of the GDP, and then that translates over to a Portugal, a Spain, man, it's going to be so ugly. I'm an idiot if you want me to predict when it's going to happen. If I said, it's going to happen now, not only would I be an idiot for predicting it, y'all would be idiots for listening to me. No one's going to know when it's going to happen. But there is so much manipulation that the downside could be, it could be mathematically actually I could just go so if I was to take out a 10-year chart, and this is crappy charting through E-Trade now, but if I was to bring this out and calculate going back in time to come on, can't get what I'm trying to show you here. One awful chart. 10-year chart. That's because it's buy idea. It's not what I'm looking for. Sorry. If I wanted to go out here and just pick a date for some of our inflation that we have going on and some of the ridiculous things that are happening, I could literally put us all the way back to that 865. And this is a horrible chart, so it's not really helping me out at all. You could make a case for 865. And all that is doing is taking out the stimulus out of the market and backing out the earnings and the growth that's occurred based on that stimulus. Short answer. It could be ridiculously scary. So when you hear these guys are talking about a 70% drop, that's all they're doing. They're just saying, hey, we take out the stimulus and the earnings based on that stimulus. It gives us a drop back down to that 865, 1285 range, and it can be scary. Okay, Abraham, it's just the implied divergence when they go together. Yes, Abraham. Warren Buffett thinks on grand administration in the U.S. Trains are already in now buying trucking. Is that a monopoly dream? You know, what doesn't Buffett own? Being the second wealthiest person in the world, I guess allows you to create an empire. I wouldn't call it a monopoly, I would call it an empire. And Buffett has a ridiculous empire that has everything from farmland to transportation to distribution to food products to everything. I mean, he really is in everything, including now technology, which is hard for him to evaluate but he's a valuation guy. And in real life, our market valuations are out of whack, but that doesn't mean based on tax reformation, money coming back, that they're out of line. And that's something I've learned. Big difference between out of line and out of whack. They are out of whack, but there is another side to every coin that you flip, and it says that, hey, this could happen on this side, which is correct. I do not see the growth that I'd be looking for in planes, trains, and automobiles, so to speak, but it's really nice to see Ford. All those people that had enough and were out at that 1047, I just shook my head, and again, why suffer through all the pain and then to leave and miss the rebound? Well, it could have gone back down to $5 a share. Could have went down to $3 a share. What a huge buying opportunity. And if you can't handle it, dang it, put some protection on. Buy some long puts. Protect yourself to the downside. You'll be in better shape. All right. Let's see. Abraham. I could view on callers, which is a bit different of what I have in my mind, but always good to hear a different approach. It's always helpful to make me think. Abraham, thank you. Thank you very much. Maud, so can't I manipulate things so it does not happen? Okay, so the comment I mentioned, Maud, on government manipulation, it's much like socialism. It always works until you run out of other people's money. Right now, what is the other people's money that the U.S. is using? Trick question. What is the other people's money that the U.S. is using? China's? Nope. Printed money? Nope. Go back to the election. What was the key word? We were using someone's money. Anyone? Actually, the comment they were using, we were using our children's money, right? Our children are going to have to pay for the debt. We're using future money. Money that should be for the future, for the people in the future, we're using up today by going into debt. It's credit card debt, right? We're using credit card debt. That dang it, if we die and don't have to pay it off, who gets stuck with the bill? Our kids. It's future money. So, what it comes down to, which is going to happen first, the chicken or the egg? Will we have a drop where someone can't pay their bills? Greece. But it turns out to be probably, and this is my mind, it probably, to make a significant hit, will probably be Europe, and it'll probably be France. And when that topples, guess what? Part of our budget that we had in place for France to be paying their portion of this or that is not going to happen. So once we see a deficit gap there, well then the U.S. is going to kind of fall. And the precursor to all of this will be the loss of the reserve currency status. We lose our reserve currency status, and that changes everything, because that is our economic and our financial advantage over every other country in the world. We have no transaction costs, we have no currency costs involved in transacting commodities. Hence, when it starts to fall, It will be a global Great Depression, and it will be ridiculously ugly. Can China save us? Was a comment that was asked of me some weeks ago. Save us? No. Could they lessen the blow and lessen the depression? Definitely. But boy, their real estate bubble right now is 4 times worse than the U.S. ever was. Mod, back to collar trading. Can you remind me the criteria you use to put on protection? Easy. Earnings and technical crossovers. Which means, Kevin, oh my gosh, do you have some positions that have no protection on right now? Like Apple has some protection on, like Bank of America shares. No protection on. Baidu shares. What a hell of a run I've had on Baidu shares. Protection at 195 for earnings with a run up to 247. It was 248 yesterday. Citigroup just shares. Clorox has their protection taken off now. Kevin, why do you have Clorox protection taken off? Because it came down and tested the second oversold area. So I took it off. Costco, straight long calls, doubled our money. Going to run those through earnings. I want to go big. DHI, DH Horton, no protection. Disney does have protection all the way down to 97.50. Dang it if those suckers didn't break 100 today. We got Disney, which is back over 100. Huge support level. I am probably going to add, on 10,000 shares of Disney, I'm probably going to add 1 or 2 contracts around earnings. Let Disney run. Ford ran Ford from 1070-ish up to 1234. Captured profits. Facebook, waiting for Facebook to drop down. Some shares are just puts, some shares are covered calls. I've got FCX shares just by themselves. NVIDIA deep in the money covered call. Nothing to have there. So what else do I have here? V says deep in the money covered call. Zion's Bank. Boy, have they made a good run. I'm going to have to roll some 46 covered calls, but basically it's just Zion's Bank by themselves. Shares are running back up higher. So, with all that said, I keep it simple. I use the 3 technical crossovers, RSI, MACD, and the 5 and 20-day simple moving average. I also do use the 50 and the 200. I look at what institutions are looking at. And if I get a RSI that's on the median line or a MACD that's flat, I go back to my old Williams percent R, which is like a medium stochastics chart, and I will let that one make my decision. Let me look at your use by promotion. And also, again, my main trigger for protection, in all honesty, earnings. Earnings is my main trigger that justifies and tells me my protection. So earnings is where it's at. What would I do with new money today? New money today, to be honest with you, You have close to a 10% opportunity with Southwest. I do like, in all honesty, Freeport-McMoRan. Come on. So if I had some new money, first would be actually Disney. Disney, I think, with this lineup can at least get up to 110, if not closer to 115. FCX. Global reflation, I think you can see a pretty good run on Freeport-McMoRan. I think there's still space to run for Southwest Airlines. D.H. Horton has some room with a nice run up from other people's earnings, not their own. And what an amazing chart that looks like for this year. In all honesty, D.H. Horton has been a big winner for me. Out of the box, Ford. Ford could run at least up to 15, if not 1750. What else would I say? Boy, Baidu's a big one, because if Baidu can pass the 250 range, it's like 325. It's another pretty good size jump up. See if there's something I missed. I'm not too comfortable on Facebook or Apple right now. Costco, I think, has room to run up. Oh, financials, for crying out loud. Bank of America has huge opportunities to run higher, but you got to look at the chart. I don't know if it'll print it 5 years up. No, let's go to the crappy charts at E-Trade. Here's what I see in financials. Looking at like Bank of America, right? This is not working for me. Guess I could go to big charts, but 35 right here. 39 for a high. For some reason, I had it in my mind that Bank of America could get up to 60. Citigroup, in my opinion, can run up to the 150s. Zions Bank, this is going to be a ridiculous one, a local one, right? Look at where Zions Bank can go to. Well, it doesn't show it here. Back up to 100 on Zions Bank. So there are some pretty... There we go. This is more what I'm looking at. Kind of moving around a little bit. Of course, that's what I got to do. So Zions Bank, up to the 100. So if I go back to like Bank of America and I pull it around, just got to learn how to use their garbage. Look at how high Bank of America has been in the past. There's $60 on Bank of America right up there. Big opportunity. And then Citi. Look at this run on Citi. Citi was up size 500. I at least think it can get to 100. So financials with some Dodd-Frank regulation, I think you have the biggest bang for the buck in financials in the next year. But with that said, Maud, I would have thought that this year as well, and it's taken longer to come to pass. So hopefully that was an interesting answer there for you guys. All right, any other questions before I call it a night? But this was just a, I just want to talk with you. Instead of giving you the everyday stuff, I just want to talk with you. Let's talk stocks, let's talk markets, let's talk what we're doing. Hopefully this is giving you an insight to a little bit about what I see and why I do what I do. Maud, thank you very much. Abraham, did I answer your questions? And Ida, you were relatively quiet tonight. Usually you ask more questions than that too. Dave, Lance, Mary, you three also seem to be asking a lot of questions. You were pretty quiet. In fact, if I missed any of your questions, go ahead and let me know. Bill, you were quiet tonight, which is okay. You don't have to come up with something. But I was hopefully trying to give this presentation for you guys to see things. And there's Lance. Kevin, is there a single stock you think is more valuable than all the others or your best investment? Baidu has been my best investment over time, although it's ran up to $7.75 and split 10 for 1. I don't have a best investment. I do believe that diversification doesn't really protect you from anything, but I must say that if you're not diversifying, I think you're missing a stock market technique that will make you some money. I think your protection is in diversification, but if you're in 5 to 8 different sectors, maybe 4 to 7, 4 to 6 different sectors, you're well represented across the S&P sectors. Sectors I would stay away from. Energy's not looking really good right now. Transportation necessarily hasn't done very well, but you've seen airlines take off. So I guess I don't try to outguess or outpredict the market. I do my research again, as I said. Usually I spend my Christmas looking for new opportunities, doing my fundamental research, and then running into the next year saying, I'm going to at least have protective puts. If I'm wrong, I'm going to protect myself to the downside, and if it falls, I want to cheer just as much for it to go as far down as possible as I do to cheer it to go as high as it can. All right, guys. Hey, with that said, thank you for being here tonight. I hope this was helpful for you. I will get this on My Hurley Investments tonight and have the recording there for you. Which do you use, candlesticks or open, high, low? I don't see very well, Ida. So in all honesty, I would prefer the open, high, low, close. But I use candlesticks as a simple, hey, it's an up day, it's a down day, it's a red day, it's a hammer. I mean, that's it. I see the same thing on open, high, low, close. I just like the colors. That's it. I think the candlesticks formations, in all honesty, other than a hammer, is garbage. And most of the time when you see a pennant or a pennant with a stick or not a flagpole, it's just that there's another reason for it. And I'd rather look for that other reason than be a strictly technical analysis trader. All right, hey guys, you have a good night. Appreciate your time. I'll post this tonight. Thank you very much. See ya. I will see you next week. Good night.